The topic today is what is needed for a Discovery Mania. So as you can see from this chart, we had this long, terrible bear market that began in 2011 and bottomed at the end of 2015, had a strong rally in last year, which stalled in August. Counterintuitively, gold went down when Trump got elected. We had a pretty good rally heading into the new year. Right around April, though, it stalled again. And it's been a pretty miserable last 4 or 5 months this year. Now, the pattern that it's followed is the traditional one. Last year, the PDAC curse got violated. This year, well, things were great until shortly after PDAC. Then the anticipation of sell in May and go away kicked in. And then, of course, the summer doldrums kicked in. But we started seeing, in August this year, we started seeing signs of a turnaround. We're just barely into September. And I think we're probably heading into a very good 2018. Now, copper and gold have actually done quite well, but it has not done much for the optionality trades because the market basically is tired of the optionality story, the feasibility demonstration projects where there's nothing really the company can do to create value. You're at the mercy of forces that you don't control. And of course, there's this unease out there that where is America going? Where is Donald Trump taking it? He promised to make it great again. And in fact, he seems to be accelerating it towards a very rapid ungreatness. So we're seeing slowing of the American economy. We're seeing strength in Europe and elsewhere. But there's a lot of concern as where is all this headed? And we're in a scenario where all kinds of frightening things could happen in North Korea, Middle East, who knows what. So gold has been trickling up because of what I think is a geopolitical anxiety. It's a variation of a theme I've talked about a lot, the prosperity argument, where in the long run the United States becomes less important simply because its relatively small population cannot keep track with the rest of the world growing with similar methods as deployed by the United States. In terms of financing, this year has turned out to be not as good as last year. March, however, was phenomenal. For venture exchange companies that are in the resource sector, they raised almost $500 million. That was equivalent to June of 2011 last year. The problem is much of this money went into the first phase of a discovery exploration bull market, and that is rethinking existing systems that are either depleted mines, where you go in there and say, well, was this all there ever was to this system? Can we drill around it, come up with new models, new ideas, new geophysics, and so on, come up with new targets? Or classic ones like the Windfall deposit, which despite its 1.6 million ounces at a PEA done at $1,200 gold, it still didn't work. And Osisko is really the poster child for this turnaround in attitude on Bay Street, where it's not the optionality, it's trades. Like if we throw enough money, brute force exploration at these existing systems, can we turn them into something special? And the last quarter of this year is going to be interesting because Osisko will have to publish a new resource estimate that confirms that their theory that this is a misunderstood Timmins scale system is actually correct. And if they do not come up with something that compels the market, we could see a backlash, a sell-off in these companies that are these system rethinks. The next stage really is old-fashioned discovery exploration, such as we had in the 80s, and which had its climax in the 90s, the climax being the Bre-X betrayal. The question I've often asked is there anything that could really bring back generalized interest in this space, the way when Voisey's Bay came along, the way Bre-X came along? And I'm sort of the view that no single discovery can really do that, because even if you come up with a $2–4 billion home run, that's just not big enough because the size of the whole sector is so large. So you get a small segment of it making a bunch of money, they put it in the bank or go after something else. It doesn't have that viral, contaminate everybody else with enthusiasm, turn the glass half full. And we saw examples of that with Aurelian's Fruta del Norte discovery during the last cycle, which was really completely dominated by super cycle thinking, the feasibility demonstration stories. Aurelian didn't really inspire anybody to give a lot of money to companies with interesting geological ideas or new exploration methodologies. So what we need is something akin to what Diamet accomplished in 1992 when it discovered diamonds in the Slave Craton. Within a year, with an area the size of Switzerland was discovered, multiple billion-dollar value diamond deposits were found, but it also opened up diamonds to Canadian exploration, and there was exploration all around the world. And of course, we were fortunate afterwards. We were then followed by Voisey's Bay, and we were followed also at the same time the Bre-X, which turned out to be not real. But for this type of excitement to happen again, we need something that eclipses a real Bre-X. I mean, Bre-X was supposed to be 80 million ounces. Today, nobody would really care that much about that. I believe, and I've recommended this stock after it tripled in price, that Novo Resources, with the help of Quinton Hennig, is the key to the Bre-X redemption. Novo spent the last 6 years in Australia on a project called Beaton's Creek, which is a Witwatersrand style quartz pebble conglomerate bed. It's been known about for 40, 50 years. Quinton Hennig went in there with the idea of trying to find a lot more of this conglomerate-hosted gold. Ended up basically failing, came up with 400,000 ounces. They raised $18 million in May from institutions that treating this as an optionality type play. And what I want to point out here is what's really interesting is this white part right here. Where they were a couple of sub-basins in the eastern part of the Pilbara Craton, which is one of the oldest cratons in the world. This white stuff are younger rocks, still Precambrian, Witwatersrand type basins, but the emptiness in this graphic, which comes from their technical report, just shows you where their focus was as little as 4 or 5 months ago. So, Witwatersrand, most of us, I didn't really care about it because it's in South Africa, they've been producing forever, but I've been doing a lot of homework to get up to speed on this because this has been a unique deposit, 2.6 billion ounces identified, 1.6 billion ounces mined. The rest probably never going to be mined. They're down to 4,000 meter depth. It takes 2 hours to get down to that level to start mining these 1 to 2 meter thick reefs. This is an extraordinary deposit because it is so laterally extensive, hundreds of kilometers along strike and also 100 kilometers down dip, tracking the beds in the basin. And companies have looked for this elsewhere in the world but have never found it. So the general view has been that this is a unique phenomenon. But Quinton has this idea that there's two theories where the gold came from in the Wits. One is that in all the older rocks upland in the hinterland, they had lots of gold veins in it, just like all those mesothermal veins in the greenstone belts of Canada, Abitibi and so on. They all got eroded and all transported down into the basin and somehow distributed in these alluvial fans within the basin. And another theory says, well, that's not possible. How do you get such a distribution? Erosion follows zones of weakness. It's going to all be concentrated in channels. You're not going to have this laterally extensive system. And why is it over such a short time horizon? So there's another theory that something happened that caused hydrothermal fluids to come in there, find these prepared beds, and just drop this stuff out, travel along this stuff. And that's also implausible. But Quinton has put forth, along with a number of others, an alternative theory that the gold from the Wits, which took place somewhere between 2.7 and 2.9 billion years ago, is a precipitation event. At that time, the atmosphere was very different. The ocean was very different. The solubility of gold was estimated at about 4 ppm, whereas today it's about 12 PPT, parts per trillion rather than parts per billion. So there was a lot of gold in the water just because of the chemistry of the water, a lot of hydrogen sulfide in the atmosphere. And around that time is when cyanoplankton started to, colonize the earth and could change the chemistry of the water locally and so on. And the theory is that something happened in that special period which radically changed the chemistry, causing gold to precipitate out into little tiny crystals that eventually grew and later on got reworked to give it that detrital placer appearance that has everybody thinking that it's placer. The importance of this theory is that anywhere where there was a body of water covering a basin and this chemical event happened would have seeded these grains of gold. So that would explain the lateral extensive nature. And Quinton was in Australia because that part of the Pilbara was at one time attached to the cap valve. In fact, around the time that the Witwatersrand Reef was formed. And so Quinton has been looking for similar, basically Wits 2.0, and he's been focused on the Beaton Creek area where there really, it's a remnant. It's probably at the limits of what might have been a Witwatersrand scale reef, but it's just not there. And lots of companies in the 50s and 60s and 70s looked for Witwatersrand style beds in the Pilbara Craton. A lot of work done, and they all concluded that based on what we see, it just didn't happen here, neither for uranium nor for gold. And this is taken from some report published in 1987, and you can sort of, later on when this is posted, you can read the dreary prognosis for the Pilbara Craton. But last August, something strange happened in Australia, 350 kilometers to the northwest, in an area near Karatha where prospectors, they call them fossickers in Australia, who run around with metal detectors and have been finding nuggets in that area for ages, found nuggets in bedrock. And an Australian company found these people digging holes on its property and sort of chased them away, and they were quite confused about what it was. They thought it was some sort of mafic rock, so I guess we got to start looking for mafic host rocks and so on. And then Alan Ronk, who had worked for Quinton on Beaton's Creek but got laid off when there was no more exploration to do, he was hired by them to help them understand that. And then they put out, oh, this is actually a conglomerate bed of very coarse classed sort of basaltic rocks and so on, but the gold is in a conglomerate bed, not the little quartz pebble conglomerate of South Africa, but something very different. And after the Artemis published that news release, Alan told Quinton, you should check this out. And he was probably the only person there where the light bulb went on and said, oh my gosh, this is what I have been looking for. And why have I not been looking, or anybody been looking over there in this area? Well, it's because you have the Pilbara Craton exposed to the north, and then you get these sediments which are like not very interesting. There was no reason. And what it turned out is there's like that little line that you see there. This is the bed popping out, and you would never notice it. The rocks, the ground is all reddish boulders and stuff like that, and it's only because you had all these crazy Australians with their metal detectors running around, and suddenly it starts to really, really beep. And so they've traced this strike now of 8 kilometers, and this is where they're doing the work now. This is still awaiting approval of the license, which they expect any time, but there's 8 kilometers of conglomerate bed daylighting. Now, Quinton published this in April, and he staked 10,000 square kilometers, and everybody says, oh, crazy, crazy man. We're giving him $18 million so that he can do a PEA on the 300,000 ounces. Well, then they published this famous video, and if you got to go to the website and click on it. You have all these Australians going around with their metal detectors and going, wee, 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 and you say, okay, what is this? And then they get out a jackhammer. They start jackhammering away. Now, in the old days, you would have seen them get shovel and throw it over a screen and all that, and the rubes would all be saying, gosh, look, a nugget. Well, when they pop over a rock, it's got this flat nugget plus a bunch of others embedded in it. And it's really funny listening to the Australians swear and go, holy you know what. And this video then went viral. The stock ran to like about 210, and I spent a week just before that sort of trying to get my head around it and realized, talking to Quentin, researching it, this may be the edge of WITS 2.0. In early August, they had taken a sample, dug a 2 by 2 meter pit about ½ meter deep, just dug up the rock, and they'd crushed it, and they used a Steiner sorting machine to recover the gold. And they came up with much, much better than anybody expected. It was like 2 ounces per ton from a 542 kilo sample. But then everybody shrugs and say, yes, you got some nuggets in there. And of course, this is an example of the number of nuggets there. And it wasn't just one big nugget that they got lucky with. But even that is not what's interesting. From the tails that the sorting machine rejected as not beeping or having anything in it, they went and processed that. It came back at 9 grams per ton gold. And this was the holy shit experience that they all had said. How can there be so much fine gold in a pebble conglomerate when it's all just supposed to be placer nuggets and stuff? And so this is now the big thing that everybody is waiting for confirmation. Because if there is a fine gold component systematically distributed through these beds, you could potentially just drill, characterize the beds, find out, treat it like a kimberlite dike, figure out what exactly it looks like, drill in and measure this base load gold. And if you get 5 to 10 grams per ton gold just from the fines, you probably have an economic deposit there and a tool for mapping it out very, very quickly. So Quentin has staked all that green stuff, and there's been a lot, all the Australian companies have been waking up and saying, oh, we're here too. But they're in here. This is the 3 billion and older rock. It has traditional greenstone belt type deposits in it, shear controlled and so on. Whatever may have been here, if under the old model of erosion, it's ended up down here. It's this part that was the white blank in Quentin's technical report, the Hammersley Basin. That's where the beds dip down. And he's basically staked all of this part here. Now, this star is really, really interesting. Now, at the moment, we're treating this story as a local freak show. 8 kilometers, maybe goes down a couple kilometers. This thing could be 5, 10 million ounces, maybe very high grade. Maybe stock will end up at $5 to $10 a share. At the moment, we don't know. It's way overpriced based on the local freak show. But the WITS 2.0 scenario, that there may be 1 billion ounces in all this green stuff, which is what Novo controls, that's what is capturing the market's imagination. Such a story, a junior finding through creativity, through being awake, through putting innovative thinking to work, jumping on it, realizing what it means, sticking his neck out and staking all this land, that's the sort of discovery that eclipses Bre-X and the Voisey's Bay and all that. This star is important because in 1985, CRA, looking for these gold conglomerate beds, drilled a 2,200 meter hole. And you can see get the report and you see the logs. And at 1,756 meters, they got a quartz pebble interval of ½ meter, which ran 10, 11 grams from 2 samples. But they never did anything because it was deep and it was only ½ meter, it was only 10 grams, and then that didn't count. But at the base, just before 2,200, the descriptions show the same type of clastic basaltic conglomerate rocks as we're seeing up here at the Comet Well area. And this has never been assayed. So right now, we have to probably wait 6 months for title to these licenses to be granted before any down dip holes can be drilled to validate WITS 2.0. But there's an outside chance that if they can get this core from the archives and pay to have it assayed to get a full sense of this, we could have even earlier confirmation. So the company has now 70 million bucks, which is good because they're going to be burning $2 million a month. 56 million of that came from Kirkland Lake at $4 with units. Eric Sprott, it's now the biggest shareholder. Eric Sprott's the biggest shareholders of Kirkland Lake, the second biggest shareholder of Novo. So those two entities have kind of a lock on the future of Novo. The next 3 months, they'll do systematic trenching of this area, characterization, get a sense of the distribution of the gold, start drilling strat holes within the property boundaries, and set the stage for diamond exploration style, large diameter, bulk sampling, where they drill these 17-inch holes down and grab, you know, the 2-4 meters, whatever the thickness of the bed is, and then process it with something like that Steinert machine to capture the nugget effect, just as you have to do with diamonds. And then when they get title to this other stuff, by then they'll have a full understanding. Then they can start stepping down dip. So the next 6 months are going to be really interesting because we won't know if WITS 2.0 is correct. And what I'm telling people now, it's overvalued for the freak show scenario alone. It's fair value if you believe in the WITS 2.0 scenario, because that would take the stock to $50 to $100. And so what I'm suggesting to people, just buy 1,000 shares of this and not more, and just to watch and pay attention. And even if you want to stay on the sideline, understand that if this is WITS 2.0, there will be a lot of people who sold way too soon, who are going to be looking for other interesting discovery exploration stories. Plus, this will put the junior exploration space back on the map, and capital from around the world will be coming in initially into this play, and then sort of saying, okay, this is about interesting theories about precipitation, about new methods, and who's got a good idea? Let's find new deposits. It's all largely undercover, so it's not like walking around stumbling on prospects anymore. The next whole round of discovery exploration is going to be tougher, but with so much capital in, all these struggling juniors from the last 6, 7 years are finally going to get very well funded to pursue interesting stories. And part of what today's whole session is all about is that there's a bias towards discovery exploration companies, which we speakers have recommended through our newsletters, because we're interested in discovery exploration, because you can get a 5-bagger just with the beginning of the discovery, and then another 10-bagger if it is large. Now, nobody else is going to come up with something like WITS 2.0, but that doesn't matter. It's the idea that you put geological smarts and capital to work, and also build on that system rethink discovery stuff that's been going on for the past half year. If you throw enough money at it, you will tease into the open all kinds of new resources, not just gold, but all the metals. And just in closing here, that little photo there, these are rocks Quinton bought from the prospectors out there. And he bought them because the gold embedded in a tuff, which is a sort of volcanic ash, it's unaltered, and these are crystalline grains of gold, gold nuggets that have not been transported. This, he thinks, is the smoking gun for the precipitation theory. And recently, he made a comment to me. They think they've now found an actual in situ occasion of this. So when that comes out, there's going to be a lot of interest in these conglomerate beds, not just there, but rethinking them elsewhere in the world where these types of precipitation events might have happened. Thank you.